Hi, everyone. Super excited to be here at SED, one of the biggest events in the energy transition. I'm going to be a moderator today for today's session, which is pretty exciting. So we're going to talk about impact and sustainability investments as part of the sustainable energy transition. And I'm super honored to be surrounded, though virtually, by a lot of fellow investors in this topic. So glad to be here with Matthias, Livia, Terry, and also we're going to be joined, I think, by Mark at some point. So super excited to be here. I think to kick off the discussion before we start digging deeper into the topic, I would like to start off with short introductions from your side. From my side, I'm Rokas Peciulaitis. I'm managing partner at Contrarian Ventures, an early stage firm investing in sustainable energy transition, and we basically are managing a fund that invests across Europe and Israel, looking for great entrepreneurs. So I'm popcorning it over to Matthias to give a short intro to the viewers.
Thanks, Rokas. Good to meet you all. My name is Matthias. I run Energy Impact Partners European platform. We're growth venture platform focusing on the broader energy transition. And the way we do that is twofold, obviously by making the best entrepreneurs in our space and kind of helping them to build the companies they want to build, trying to be good sparring partner, good board members and all that. But on top of that, we also have a model built into our platform that brings revenue to the portfolio firms we fund. And that platform really hinges around the partners we have, which is to a good extent energy utilities, but also there's like financial investors and sustainability investors behind our platform.
So I think, Livia, could you give also a short introduction about yourself and what you're doing in Plug and Play?
Thank you, Rokas. Yes, so I'm with Plug and Play Ventures. We are a venture capital fund based out of Silicon Valley, and my role is basically overseeing investments for supply chain logistics, Industry 4.0 and manufacturing, mainly in Europe. So we are early stage investor, but we do a lot of investments with smaller ticket sizes. In the last 12 months, we did around 250 investments globally. Still, majority of our investments, around 70% of the investments are executed in the US. Besides investing in early stage companies, we also operate innovation platforms, and we help adopt our corporate partners, more than 400 corporate partners, adopt new technologies across 17 different industries. So we are active in energy, supply chain, fintech, retail, also sustainability, new materials, and packaging. And of course, besides that, we help our portfolio companies and other startups in our network to acquire customers and implement their technologies, adopt their technologies on the market and the industry.
Thanks a lot, Livia. Now moving over to Helsinki, Terry, could you say a few words about yourself and Helen Ventures?
So my name is Terhi. Pleasure to be here. First of all, it's fantastic. So I represent Helen Ventures, which I founded last year. So we are the newcomer in the field. We focus solely on the energy. So we are sector focused. We are the investment arm of Helen, one of the largest energy companies here in the Nordics. And in terms of what we are looking for is the startups who can help us to transform the energy sector. And in terms of the focus, we focus on the early phases. And in terms of geographical focus, so across the Europe plus Israel. So that's what we do. Pleasure to be here.
Great, everyone. Thanks a lot for the introduction. So I think Mark is not yet here. We'll see if he's going to join later, but we'll tune him in. So I want to start with this big elephant in the room, which is called impact. And this word is sometimes perceived and commended through different angles. I think we as investors probably look at through the angle of how we shape our investments and what we kind of look for in target portfolio companies. But I really want to sort of, drill down and reflect on what has been going on over the last couple of years. So impact has been predominantly on everyone's table, whether you're a public investor, whether you're a venture capital or private equity investor. And that has been funnily heavily to also the side of portfolio targets or portfolio companies that we already have in our portfolio. And interestingly, one of the most prominent people in the industry, bigger asset manager by assets under management, BlackRock, especially Larry Fink, has been very advocative and also outlining a lot of things that every investment in the future would be sustainable and having somewhat a very tangible impact. So I want to kick off our discussion about this, what it means in the context of sustainable energy transition, by really asking what it means to you, and maybe not just as a word, but more as a construct from how you as a fund take it from an LP perspective, as well what it means to your portfolio and targets that you look at. So I want to start off with Matthias.
Yeah, sure. I think if you talk about impact investing, it's really important to get the time scale we're in, right? Because times today are very different than they were 10 or 20 years ago, right? And in earlier days, there was that connotation that impact is less for profit and more for only the impact. I think that has changed fundamentally, and that change has been a function really of technological progress, right? Today, if we look at the world around us, there's all the, say, power generation technologies, the renewable power generation technologies, they work at scale, they work economically, they outcompete the conventional ones. So I think it's a perfect storm where you see a lot of investment is coming into that sector, both on the asset but also on the technology side. And that, if you focus on that part of the value chain, it has an inherent positive impact. In our sense, that's an impact on for a better, cleaner and greener planet, right? I mean, we're an impact investor in the sense that we focus on ESG metrics too, but the good thing is we don't have to compromise on returns at all. In the contrary, it's really an attractive field that has developed a great dynamics over the last years. So we really see impact investment as our way to kind of save the planet, and we think that entrepreneurship, like backing good entrepreneurs, is, in our view, the most effective and also the most sustainable way to make an impact. Because I mean, if you look at how change happens, and in our case, we want change for the better, for the greener and the cleaner, it's often driven by those smart and daring entrepreneurs. And that's kind of our angle, how we want to make a difference, and money at the same time, by really kind of focusing on that part of the change that's happening.
No, amazing, Matthias. And I think there's very clear format to look through when kind of discussing through that topic, right? There is shareholders. In the fund context, it's LPs, right? Then you have clients, which are entrepreneurs that we serve, right? And then there's also employees embedded within our firms that we're building. And then also we have communities that are external factors to it, how we contribute as a firms. And I think these all have very different angles, how one thinks about it. Maybe kind of going further with everyone else, because I think everyone is going to have a different opinion depending on the LPs that you have. I think, Matthias, we're going to definitely dive into your side of LPs, because you have some great backers that I think some of them we're disclosed, especially in your new funds, like some Microsoft, for example, which are again changing rationally as an organization and entering this market through like a fund with a fund investment to contribute with that as well, with the impact, the single most important word that is part of this discussion. So I'll touch briefly upon that later down the road. But Livia, maybe kind of going through the same reflection of what it means for you personally, these two words, whether impact or sustainability in a broader sense.
Sure. So for us, or for me personally, it is great that we have a chance to support founders in the impact space with our resources. So that's what we have, resources, and we have financial resources, we have the network, we have the expertise that we can contribute and help these entrepreneurs grow. And I think there is a very a fundamental aspect or feature that impact founders usually have, and that's that they are very driven by a deep purpose, and that also means that they will be very persistent, very consistent with their goals. They have a deep mission, and they are not only driven by the financial return, the economic return. And it also triggers a chain effect, right? Because with their motivation and drive, they can also attract the best talents, and they can work with the smartest people. And it also means that, as Matthias mentioned, that we don't have to compromise. And impact investment doesn't necessarily necessitate a concessionary return, because we can actually find startups, tech companies that have an impact, social or environmental, but also at the same time, they're also driven by economic return and financial purpose and growth. So that's one thing. And then the other aspect of it is that impact investing also helps with mindset change and also building communities. And communities will become, at the end of the day, the customers that will use the products or the services of these founders from the impact space. So it's like a chain effect that is actually driving and makes the whole economy functioning.
Terry, what about you? What do you think would be the most touching important points from what it means sustainability and maybe from your firm or your personal perspective?
For us, the biggest element in the impact or sustainability is looking at the solutions for the environment. So if you think about, we focus on the energy space and looking at one of the biggest problems in the world at this stage, we need to look at the climate change and find the solutions. And for me personally, I'm a big believer in the tech. So I believe that if you can find the solutions to make these big issues better, that's what we should be doing. And I also reflected to what Livia was saying. So it's very much also to do with the entrepreneurs we work with. So I believe that as an entrepreneur, the work is so hard. Choose something which is almost impossible, but still do it. So you need to work on something where you actually have a passion for. So you're making something bigger, and you have the purpose to drive. And for me, that's the core of the looking at the impact. You can, of course, have focused funds which are working on the impact funding. With all the measures and all the reporting and everything, which is fantastic. But I think for all of us, regardless of whether we classify ourselves into impact investing or just general investing, working on this topic is the core. And obviously, if you're doing the right things, solving the greatest problems, of course, we are having something which is meaningful for building up great companies as well.
Great. Thanks a lot, Terry. Mark, pleasure to have you, though a couple of minutes late. So we're going to deconstruct everything. So short 1-minute intro about yourself, and then what impact or sustainability means to you personally, and maybe Breakthrough Energy Ventures as a whole.
Sure. My apologies for being a little late here. They told me I had to use Chrome and it didn't work, so I finally got to work on Safari. So, but apologies again for being late. So yeah, so I'm Mark Hartney. I'm with the Breakthrough Energy Ventures outfit, and in particular working here in Europe. I'm based in Lisbon, Portugal. BEV is a climate impact focused fund. It really came out of the COP21 meetings in Paris as part of the whole mission innovation announcements and elements that came. And it's a $1 billion fund. It's focused on impact on climate impact. In fact, we have a filter on all of our investments that we expect them to be able to scale to a 1% of the CO2 or CO2 equivalent solution, which looks like about 500 gigatons. So it's a pretty substantial, or I'm sorry, half a gigaton. Let me clarify that, 500 megatons. But it's a pretty substantial bar to try and clear. And so we really are focused on things that make a significant delta to the climate problem, and that's the motivation of our LPs. Bill Gates is the lead investor on this, and then 20 plus other high net worth individuals who kind of share that and that philosophy and that rationale for investment. So that's the story on the fund. We have a European fund, which is partly funded by BEV, the $1 billion fund, and partly funded by the European Commission through the Horizon 2020 program, and through the EIB. That's a €100 million fund. So that's kind of the scale of what we're looking at in the European investments.
So Mark, on your personal note, what impact as a word or sustainability means personally to you? How do you define it in a sort of short?
So I mean, to me, it means trying to address the things that have not been addressed through sort of typical market and policy interventions, right? I think most people who are cognizant of sort of the climate impacts and the scientific basis for understanding this realize that we have a problem. We have to find a way to solve that problem, and demonstrating that we can introduce more sustainable practices, moving away from fossil fuels, moving away land and building practices that bake in a large number of ongoing emissions are things that need to be rectified. And you have to do that in a way that's sustainable, not only for the environment, but sustainable from a financial point of view as well.
Mm-hmm.
Absolutely. So I think kind of stepping now into our core discussion, I think it's great to have each one of us personal reflections as well as our firm reflections that we stand by to understand what this really deconstruct the word of impact, right? And I think previously, I think I started off more, with a Larry Fink kind of quote that everything in the future would be sustainable, basically, and every asset class will have to look up for it. So I think I want to deconstruct this whole discussion through and try to understand in this short time that we have what actually impact means in the context of sustainable energy transition. And I think what we call sustainable energy transition implied is a change, right? So if we split these into these four things, what I said, shareholders, clients, employees, and communities, the most critical aspects of how we as an investors in the way we invest, the way we report to our shareholders, meaning LPs, as well as to the employees within our organizations and the portfolio company organizations, and as well communities that we could potentially impact, whether that's local communities as ecosystems, whether it's communities within specific subsegments of group like industries we invest. So I want to kind of I want to engage this as discussion, so not go and pick on and make it like very interactive with people that are watching. Which one personally for you is the most important one, and which one you think actually will have the biggest impact or the driving force towards everyone being sustainable in a way, or reflecting that at least a part of their decision-making process, part of their decisions, how they take them, or whether that financial gain is more important than the impact itself. Could we just try to shoot some ideas around?
Yeah, maybe by disagreeing a little bit, I think it's not either or, right? Because I think what we're seeing today, which makes kind of that perfect storm, is that interests are converging, right? I mean, the communities, the consumers have their preferences, which is more and more aligned with kind of what financial investors are trying to kind of impact with the money they bring, because that's a strong influence on the world. So I think it's all coming together very nicely. And in our case, we have kind of partners that come from the corporate side of things, energy firms. We have impact investors like Microsoft's Impact Fund, another 1 billion effort, kind of we use the entrepreneurial route to improve the climate for the better. So I think they're all kind of aligned, and you see it all over the place. You see it in the ownership of funds. You see it kind of in the community, and I think that's what kind of makes me excited because it seems like a perfect storm that's building up, and it goes hand in hand. Like it's kind of virtuous circle, really. So that's what I like about this situation we're in.
So I would agree with that. I think two really important things from our perspective are getting to scale and getting to impact. And I think for that, you absolutely have to have the shareholders or the financial community behind that and willing to do that. And to give a U.S. example, since that's where I've spent most of my career, as we finally got to the point where solar in many areas is now beating out RFPs for beating out gas plants for RFPs, right? You've gotten to that tipping point where it's no longer sort of led by sort of environmental or policy, but the market has stepped in now and said this is the right solution, right? So you have to do that. But I would agree with Matthias that the consumer sentiment is what's really gotten a lot of attention in the last few years, and that's driven a lot of corporate behavior. You see people like Microsoft and Amazon and others who are making these carbon neutral pledges now. And in a large part, I think that's driven as much from a financial point as it is from a consumer sentiment point.
I think it's great, Mark, to see like I would say the most influential and maybe independent players taking actions, like large corporates or like high net worth individuals or state-backed funds like News in our case. They all kind of, they use the degrees of freedom they have and the power they have from the funding they can provide to really make an impact. But it's very much in line with what people want, like the consumers want.
So. Right. And so that makes it a great time to be one of these hungry entrepreneurs, because now you have more pathways and more sort of powder behind you as you scale and try and do that. So I think every element of this is essential, but it's great to sort of see a longer term pathway that gives you hope that you can build these high impact technologies to scale.
Terry, Livia, any comment from your side?
Yeah, maybe. Yeah, go ahead.
Go ahead.
Okay, thank you. So this is also what we are seeing, and I couldn't agree more with Matthias and Mark, that this is basically a chain effect, and also the corporations that we are working with, that they are sharing with us their challenges, what they face, that impact is always very important for them, and also for the entire supply chain. They have to comply with environmental and social standards, and they also demand that from their suppliers, the top tier suppliers, and also the suppliers even more on the bottom of the supply chain. So it means that there is always a need for startups, for tech companies that also have to comply with these standards. So that's one side of the table, like the B2B sector. But also when it comes to B2C, I think that there has been a turning point in the last 10 years, and consumers actually want to contribute to a good purpose, to a good cause. And they also prioritize purchasing products that are recycled, upcycled, or that has a positive impact. So I think that we see a positive trend in that sense, and this the trigger on both sides is there. And as I mentioned before, of course, impact is important, but we wouldn't end up investing in a startup that doesn't fulfill all the other aspects that we want them to fulfill on the technology side, on the market side, on the team side. So if those standards, those aspects are not fulfilled, then only having positive impact won't be enough.
And maybe just to add, like a perspective on this, so the big challenge, of course, why this is so difficult, is that we're dealing with a systemic change which is required. So that it is not like you ask who should be doing something. So we all need to do something. So whether you are a governmental like policymaker, or whether you are the consumer who decides what they do on their own money or on their own time and the way they behave, and the corporations who can make a difference from the inside. So what is so interesting at the moment is like it seems to be finally at the stage where everybody sees the problem, and the problem is so grand that we need to do something about it. If you think about the climate change, for example, and but the challenge is that there is no one silver bullet which solves, but it's a series of multiple things which we need to enable. And I think the like my perspective today is what I can do. So not just to go outside and say somebody else needs to do something, but what I can do to make an impact, and that's what I'm doing at the moment. So working on from the inside of the industry to solve these issues, because that's the only way we can actually make a difference, is actually getting this into field and getting them into action.
Yeah, just an observation. I think around this table, it's great. We have almost the full value chain covered, at least when it comes to backing entrepreneurs, right? From early stage, like investing to Series A, and more later stage, like we do, but also like from a less risk, probably we are on the more kind of conservative side of things. And Mark, I guess you're on the bold side, like really more forward leaning and taking higher risks. And I think it takes that combination to make the ecosystem work. So I think it's great to see. It's maybe a coincidence, maybe not, to see it all in this one panel, but I hope that's representative of how mature the industry has become.
Yeah, very great observation, actually. I want to be a bit of a devil's advocate in a way. I think, and I kind of tried to think of an analogy how to shape this question, but I thought since Halloween is kind of coming close, so I think I will use this Halloween analogy as a Halloween party. So everyone goes to the party, everyone is wearing a mask, and a theme is impact, right? So the analogy of all the people in the party are actually funds, not necessarily climate focused, right? Given the word has become such a trend or a buzzword, you could call it, how much of these people that are in the party you think are with the mask that they don't represent behind the mask? And I think where I'm going with this idea is like we have thesis embedded impact part if we look at through lenses of ESG, environmental, for example, right? And Mark, to the extremes, has even the fund structure that is accommodating this impact, right? So you have a longer term and different incentives for again, making decisions based on very certain KPIs that the company or target needs to meet in order to be even qualifiable for investment. So in a broader index context, because we're trying to deconstruct the word of impact, how much do you think is a trend or a buzzword and actually reality that people stand behind?
I think in the very best positive sense of the word, it's a trend, right? And I think it's good, to begin with. But I think whenever there's a trend, there's a risk that people are overdoing it, or it's attracting people that might not be fit for purpose, right? And that's what you probably will see. And there will, I think that the overall impact will be good, more companies that have a positive impact, but it will attract kind of a broader audience that might not be 100% on the same. And you probably find out over time. First of all, you can probably look at how people actually quantify the impact, because it's one thing saying it, but then accounting for it properly. And our chief impact officer is a professor at Boston University. He's, from my opinion, very strict about it, but I think it's a good thing. So if you bring scientific evaluation also to the impact quantification, I think that'll help a lot. But let's be clear, there will be misses along the way. It's pretty certain, like with every trend. But overall, still, I think it's a good thing.
I think, Mark, you're one of the best ones to address that, because you probably spent quite a bit of time comprehending how that very comprehensive model of assessing companies looks like. What's your take, and generally all more in an industry context?
Well, so I think one thing, looking at the entrepreneur side and the companies we invest in, there's very clearly an assessment of sort of the motivation there and the sort of commitment to the kinds of sustainability goals that we have that are, uncovered through trying to see how they get to 0.5 gigaton and sort of, understanding motivations in the team and how it's put together. So I feel good there. I think, with the investors that we bring along, so we don't do any of our investments as a single company. We build a syndicate and all of these, and I think we've seen quite an evolution over the few years that we've been in existence, in more and more people coming in to do that. So, I think to answer the question of sort of who's got the mask on and who's not, you look at behavior rather than appearance, right? And so people willing to come in and put their money in there is good. I think there are a lot of people who can certainly talk the talk. The difference is, can they actually walk that too and put their money there? One way you look at sort of this, and I'm reminded of a couple companies in the U.S. where managers had sustainability goals built into their bonus structure, right? That's a clear example of aligning motivation of the organization with a change in direction, and those are the kinds of things that I think are indicative of somebody who's there's a commitment at the top that's deploying this through and affecting that change in the organization, as opposed to going out and giving a couple of press releases and claiming commitments for 30 years from now that don't really have a pathway to be realized. So I think looking at sort of the details under that, as opposed to headline press releases, is the important way to suss that out.
Livia, Terry, any take on that as well? What you come up in the industry context?
So I think this is certainly a trend, but at the same time, if you think about what we are dealing with is something so serious that if you only act on it but not, or like pretend it but not act on it, we are shooting ourselves into the foot, and we can't afford it. So that's very clear. As I said earlier, so for me, the question is, how do we find the solutions? So the solutions which actually can take us forward, which are actionable. So looking at the capabilities, like if you look at the solar and wind, so now getting into the level that is not a question of you choose either or, but you get both. So you get so it makes a perfect economic and environmental sense to do the right things, and finding out the solutions also to overcome the issues like what do you do when it's not windy nor light, or sunny. So finding out the solutions in the energy system which match with the efficiencies and the balances of what's needed also in the other areas. Finding out these solutions is so crucial. I think that it would be also like naive to say that sustainability overcomes the rational behavior. So thinking of like some of the tech which we all see happening are maybe too far-reaching for certain funds or certain actors to invest in a certain phase. So I think that doesn't how would you say so you need to get certain things happening. Maybe Livia was saying it earlier. So you need to still have like big market. You need to have customers who are willing to pay for it. You need to have a good team. So you need to have all these ticks together, because otherwise you don't create impact. So investing in something which is not feasible, for example, at this stage, the product is too early phase or technology is not there yet, is still an R&D or research project into the like university, for example, but not necessarily something what we should be investing. And that doesn't make us pretend. You need to find the right address to all of the different phases, so that we can, as a network or a network effect, to get steps forward, so that it is investable in the future. Long answer, but this is how I see it.
Maybe if you want to understand if it's a trend or a bubble, I think the way I would do it, I would look at the different type of startups that kind of trying to fit under that umbrella, right? Yeah. And then you can get a good sense. I mean, in my view, there's 3 categories. One that have a direct, in our case, climate impact, like say a smart thermostat, reduces energy consumption by 1/3. Great, check. Then there's what I would call the enabling technologies, where it's not obvious but still important. Say a software to manage the power grid so it can cope with more renewables on the grid. It's hard to measure, but very important too. So those 2, I would say, are good. But then there's that third bucket of people that just see it's a trend. I try to raise under that catchphrase. And the more you get of the third bucket, the more you can actually say it's a trend. It's a bubble, right? So I think if we get it, and we all get from our deal flow a sense where we stand. I think for now it's good. I mean, there's lots of deals in the first 2 categories. And we all have the skills to see the third category easily.
Matthias, this is a great sort of a comparison that you made, and I think there comes a question out of it: does more impact means more risk, as through a lenses of a fund manager? What do you guys think? Especially on the kind of hardware stuff that maybe if that technology worked, let's say if we made the electrolysis hydrogen work and be scalable and cheaper than BEV, then we'll use that in the context of, I don't know, ammonia, that is one of the biggest CO2 polluters. So like, there's that impact, but it's something for Mark probably to read up on more, because we're not willing to take that risk, because it might take 10 years to even go commercial with that. So, but that seems to be more risky how we perceive it, because revenues are going to be in some promised wonderland in the next like 5 to 10 years, right? So does that implied mean or no? So I'm sorry that I interrupted you. You wanted to say something, Carrie?
Yeah, I was just saying that goes into like looking at which phase the technology, if you think about is a technological like a new innovation, which could actually fundamentally be something which is so super important, like looking at fusion technology or small nuclear reactors and this kind of technology is really, really important and fundamentally important that we get this moving forward. But then we also need to understand like among us who are the best, which phase are they at, and what kind of a phase they can have an impact on, and whether that matches into the fund structure and stuff like that. So they are like intricacies which we need to take into account, but the core is to find the players for different phases so that we can actually take them forward.
Yeah, and Terry, I think that ties nicely into the question that has been asked by the audience, like what does early mean, right? And I think if I read your answer, it depends on who you talk to, like what kind of fund you're with. And Mark is probably nothing is too early. I'm probably more on the very conservative side. Like everything is too early that cannot sell immediately and scale in next 2 years. So.
And early also, what is early? So if you define the early stage investment, we are normally looking at it how old the company is, but then the technology, what they're picking up, and the type of capital intensity and this kind of things, they might be in a different phase. So it might be that it's an early phase company, but the tech is already proven, for example.
Yeah.
Yeah, and so we'll certainly go early in terms of technology risk, but I think we do that with a thoughtful approach, right? So, many of us at Breakthrough had spent time at ARPA-E, which was kind of the prototypical U.S. early stage funding idea, and I think now the challenge is not only will the technology work, but will it matter, right? And so does it have a path to market? I mean, Terry brought up earlier the concept that you're in there trying to compete against incumbent technologies, which have got depreciated assets that they're building on. So you're looking at sort of OpEx versus with no CapEx, and so if you try and come up with something that's got to go in and enter that market, there is a point that it needs to get to at scale that it can compete effectively against that. So that's one of the bigger gaps there, right? And so you look at things like the Innovation Fund in Europe, what was the loan program in the U.S. as ways to help bridge that gap and bring those capital resources in. I think one of the ideas now is that we're starting to see some private funding come into those early stage, willing to sort of help pay down and buy down that learning curve that's required to get these technologies to the competitive stage. And if you believe they have the long-term entitlement, then I think that's probably a good bet to make. Yeah. And so one of the challenges we do is really try and assess all of that, not only from the early stage technology comprehension and understanding and viability, but what's the path look like, and what is that investment going to be? So we're open to those ideas if we can find the ones that fit all those criteria.
Exactly. And if you think about the S-curves, so you typically need to go through the S-curves of different techs. So of course, it's crucial that we get this eventually better technologies into the stage that they can indeed compete in the market and win the incumbent tech. So waste also, like over there, I think the governments are playing an important role, and like a Green Deal, for example.
That's where I wanted to go next, actually. With this.
Exactly.
So okay, I think we definitely have domestified to some extent the impact word and sustainability word, but the next big elephant in the room is the word government and policy. So as you mentioned, Terry, and I continue with that. So I think that's where I want to spend the next 10 minutes, because again, it's a very crucial one, right? And I think, Mark, I kind of wanted to start with you because you've seen it all in US, and that happened before to a certain level, to a very big level, even before it now started in Europe with European Investment Bank to being Green Bank. And that's the first step. And then other things that, certainly within even BEV that you've done this fund with the European Commission certainly sends a clear message where this is going. So maybe a reflection from your side. What do you think this, government and policy in the context of impact mean in where we're going with sustainable energy transition?
Yeah, I mean, I think it's truly important to do that. But I mean, you could look at the U.S. today and say, is it essential? Well, maybe not, because we're able to continue despite some of the top level government lack of support in some of these areas, I would say, right? And a couple of years ago, I was at a conference here where I was asked to kind of comment on the U.S. thing. You have to realize that the federal government is one piece of that, but state governments and many, such as California, make continued sustainable investments in these things. So that's kind of wind at your back, right? If you can get that government support, and I think most governments, even in the U.S., are strong supporters of the underlying R&D that can lead to that. The question is sort of what's the timeline then, right? I think one of the other things that's really important is there's discussion about whether we're going to have border adjustment tax for carbon in Europe now, right? And so things like that can be incredibly strong signals and start to force things to happen, whether that comes to pass or not, above my pay grade, but it's the kind of things that I think a strong, clear government signal can really be an accelerant in a case.
Very important one. I think especially in the recent kind of trends that is going for the batteries, for example, is 2 days ago, I think European Commission released that they will be reviewing how the traceability of the battery materials and then implying certain restrictions, which clearly changed the whole dynamic of an industry through one sentence, right?
But also, I think there's a hierarchy of things to observe too, right? Because I think government intervention is good and important. It can be a great catalyst, but it cannot go against like the fundamentals. And again, in our case, the good thing is the fundamental, like the scientific and the engineering fundamentals are just ready now. So you can use government intervention very efficiently these days, right? Because for instance, if you need to close the gap between an electric vehicle and internal combustion engine vehicle, it's not all that much anymore, right? So you can have quite a big of an impact as a government or with limited amount of money usually.
A good example of that, for example, looking at the electric vehicles and how most of the new cars in Norway are now EVs. So clearly it works if you build up that kind of incentives into the system to get it right.
Yeah, and I think if I may add to Terry, also enabling an environment where all of these like producers of products with positive impact can also place competitive pricing to their products. So with that, motivate the demand side to actually choose those products with a positive impact. And also the other aspect that would be important to be enhanced by the government is education. So we can start it early enough. We have to motivate the students at schools, like in education, that they should pursue their lifestyle with positive impact. And then at the end of the road, all of these incentives and triggers will just enhance the demand side, and will enhance and create demand for these services with positive impact.
So summarizing everything, it seems we're on the right track with the word impact and how it kind of relates to our lives as well as consumers and also as investors. It seems there is a pull by corporates and shareholders. There is a push that is also by the consumers. So given that seems the infrastructure is there, what do you think needs to get to make it a permanent fixture for basically, as for example, from venture capitalists, like every deal needs to be that? Or do you think that's an extreme and that should not be the case because there are certain industries that not necessarily should embrace it in full, maybe compared to how vested we are maybe focusing on the sustainable energy transition in this context? What's your take as a final note, and maybe something that you think is missing or you would like it to be here, given that we have over 115% people listening and probably some from government, some entrepreneurs, some LPs, some investors, fellow investors?
I think one thing would be great, I wish I would see in the next couple of years, and I'm hopeful to see, which will probably change dynamics quite a bit, is like very large, very profitable exits, like where sustainable companies had been sold the way that kind of other tech companies had, right? Because that's something that has been missing to some extent, and that will change the game and get even more momentum. If I could ask one thing, that'll be it. Ideally for my own fund.
When it comes to,
go ahead, Livia.
Okay, thank you. When it comes to founders from the impact space, as they come very often from the scientific background and academic background, they sometimes are not like practical enough or like smart enough in a way to convey a message that they are also driven by economic returns. So I think that these founders should be able to speak the language of investors or put their pitch or give a message in their pitch in a way that is also attractive for the investors, and not only focus on the impact, the purpose, but also kind of highlight how there can be a financial return down the road. So I think a little bit like matching the supply and demand and being able to speak each other's languages on the investor side and the founder side would be very important.
Yeah. Just for devil's advocate, I think we as investors should also kind of go more towards the entrepreneurs and understand their language better and maybe help them translate. So I think that's something we as a community can also do.
Absolutely.
My view on this, so thinking of the impact and us doing something here, like our jobs. So I think one of the fundamental reasons why I do believe that the work or the investors as the founders will be working on this space is that we need to have like, where are we using our times? So where do we, like entrepreneur starting up the company, living with that for 5 to 10 years, and we with them as investors, it's also we are in this situation that what do you choose to use your time for? So if you use your time for making a difference, making something where you actually have an impact, which makes the world better, if you may, that's like why would you choose something else? So that's my view on it.
And I guess I would pick up where Terry was and say not only that, but one of the things that I think we look at is to get to that scale, you need to move fast. You need to build teams. You need to build alliances. And so there really needs to be a sense of urgency more broadly. I think many people who are looking at this from a climate and sustainability point of view recognize that, but I don't know that that's as widespread within the community. So being able to move fast, be able to not sort of be the lone entrepreneur who's going to make a small dent in this, but build a big team that can make a big impact is one of the things that we really look for and hope to see more of. And so that's been heartening over the last few years to see more people step into this and embrace it and participate. So, but we can always do more.
Absolutely, and I think great. I think opinions and I think ideas from your side. I think one narrative that I think I saw someone send me a TikTok video, and it was basically a lady saying, we live in a planet with a finite resource. However, our economical model is based on infinite growth. So how does it make sense? So taking that into account, I think technology is one of the given that I study economics in university, is one of the things that lifts your curve instead of shifting it. So so technology is definitely the solution for the infinite resort to be more captive, and proven it that we can sustainably grow, and sustainably doesn't necessarily mean also lower growth numbers. It's just in a more sustainable. And I think it's amazing that we have all you here, not just here, though virtually, but also doing jobs that you guys are doing and investing back in these entrepreneurs, because technology, as we know, doesn't grow on trees. It's kind of built on someone's will and ideas, and they definitely need some capital to be backed. So amazing, and very quite optimistic about the future where we're going. It seems like the timing is right. I don't know if we have more time. I think we were meant to be wrapping up around 1:30. So pretty cool to have you here. Unfortunately, I would love to be in Berlin and see you in person and sit next to you. This really unprecedented time requires for a lot of Zooming, but as always, pleasure to have a discussion with you, and hope to see you guys in person soon.
Thank you, Rokas.
Thank you.
Thank you.